stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Chips and noodles is what we're talking about this week, in a manner of speaking. A couple of interesting stock picks that feature each of those items. We'll start with Brian Hamilton. Oh, let me say Brian Hamilton, Brian Boland, both here to favor you with their stock picks this week. Didn't want to neglect anybody.
Yeah.
So, Brian Hamilton, we'll start with you. You've got the chip maker.
Yeah, Intel, they recently reported earnings where they absolutely crushed the Zacks consensus earnings and revenue estimates. They did so well, it was their best Q1 of all time in company history. Now, there were three major things to come out of the earnings report. First, their memory segment saw revenues increase by 20% to almost $1 billion. Also, their data-centric segments now account for almost 50% of total revenues. Now, management had been really focused on these two aspects for their long-term growth drivers, which they're doing fantastic now. The other one is last year they went out and made an interesting acquisition called Mobileye, and it's for the autonomous driving. Well, this is way ahead of schedule. They actually have a test fleet up and running and working in Israel. So this is another good long-term driver for the company as well. The stock did so well, the company did so well that management increased upside guidance for Q2 and increased both EPS and revenue guidance for fiscal year 2018. Wow. And when analysts hear increase of guidance, the alarm bells go off for them, and you can really see the changes here in our detailed estimates pages. And we can look here, we can see that we have almost unanimous agreement on the upside over the last 60 and 30 days. This has pushed Q2 estimates, Q3 estimates up, and fiscal year 2018 and fiscal year 2019 estimates all up. But another interesting thing with Intel is if we scroll down a little further in a detailed estimates page, we can take a look at their surprise, their positive earnings surprise. They have been consistently beating by over 20% for the last 3 consecutive quarters for an average 4-quarter positive earnings surprise just over 20%. So this isn't just a one-time thing. These guys have been consistently doing this. And we can also really see that in their price and consensus graph here. And if I can switch over here for it. We can take a look, and we can see since the latter half of 2017, the stock price has been on an absolute tear. We can also see improvements here in year-over-year analyst estimates on an annual basis here. So that gives us a really strong growth story. So they have the memory segment and their data segment, centric segments as their big long-term growth drivers. And while the company is growing and the stock price is going crazy, they also pay a 2.2% annual dividend yield as well.
Wow.
Yeah.
Can't beat that.
Nope.
All right. Brian Boland joining us remotely. You're the one with Noodles and Company, right?
Right. I like noodles, and Brian likes chips. Terry, what's your favorite type of food?
Oh, geez, name it. As you can tell by looking at me.
Right. Noodles and Company, NDLS is the ticker symbol. It is a Zacks rank number 3 hold, but it has an A for growth and a C for value. Now, you would think that this would mean that this is a tough stock to like right here, but you can see from today's action already early in the session that the stock is up pretty solidly, and we're going to see a little bit later that the stock has been running since its most recent earnings report, which was a miss. If we jump over to the detailed estimates page, we can see that earnings estimates aren't necessarily going all in the right way. A slight bump up over the last 60 days for this quarter from 1 cent to 2 cents. Things are holding flat for next quarter though. And then if we look at the year, things are actually moving the wrong way. We've got 3 cents as the number, but just 30 days ago we had 4 cents. But next year, looking better, 6 cents to 7 cents. So I mentioned that there was a miss. There was a big miss right here. The company posted a loss of 4 cents when a loss of 2 cents was expected. So that was a 100% miss. But you can see over the last couple quarters, it's been a real feast or famine here at Noodles. But the idea is that going forward, there is probably going to be a little bit more feasting here. We can see the stock has been basically in famine mode. This has just been an ugly ride down here from when the stock was in the 40s down to the single digits. But the last couple quarters here, things have started to turn around. Now, one of the ideas here is that there is a new type of noodle that is a low-carb noodle, and you don't necessarily think of noodles being low-carb, but they're introducing this, and this is seems to be quite the menu item hit. So maybe it's a good time to take a look at this stock. You know, if I could blow this up even further from that, even though that stock missed, we can see that just from this chart that it has really moved higher, and I would expect this stock to return to the double digits somewhat soon.
All right, thanks. Do either of you own either of these?
Personally, I don't, but I have Intel in the income investor portfolio.
Okay.
I do not.
All right. Well, thanks for that. And don't forget, always more stock information on our website on these two companies, as well as many others. All you need to do to begin tapping into that is get over to the homepage, Zacks.com, and start reading commentaries, stock stories, and a whole lot more. With Brian Hamilton and Brian Boland, I'm Terry Ruffalo.